All right, that's a wrap. NYU IHIF 2026 done. People are feeling optimistic. Alexi, what was the mood in the room this year?
This is an investment market, and investment is led in many senses by the perception, both data, but also a sentiment on what's the market, where's the market going. And so to answer your question, the mood was very positive. Bullish is how I would describe it. From the operators that are, they've seen a normalization in RevPARs and operating performance. But, luxury continues to perform well. We just heard from David Pepper, CDO at Choice Hotels, which is seeing some positive performance in the mid-scale, which frankly we haven't seen for quite some time. Obviously development is still very much stunted. It's less than 1%. The operating performance is there, so the operators are happy. Ultimately, investors are still very bullish on the sector. I think many that are looking for distressed assets haven't really seen them come to market. That is still waiting to happen. There's around $150 billion of maturing debt in hotels, which are going to be happening over the next 2 to 3 years. Interest rates are still elevated. But, a lot of value-add investors are coming into the space, and then long-term institutional capital also likes the space because, it plays through cycles, right? So I think the operational levers and applying that expertise, which was the theme of Sharpening the Edge, was really kind of heard throughout the program and heard throughout the conversations. But overall, very bullish, very positive, realistic.
Stacey, what are you hearing?
Yes, I echo a lot of what Alexi was just saying. And really what I took away from this was a very positive vibe that there is capital out there. It's selective. Maybe development is down, but it's really about creating value, and investors and operators are looking for creative ways to unlock NOI through food and beverage, through developing experiences, converting unused spaces within their properties, and also bringing in AI and technology to help with labor, help with operations. And so really we were able to dig into AI and technology this year and bring forth how people are using it to drive value within their operations, but not only on the operational side, but on the guest experience side as well. They're really looking at using technology full circle.
I was struck, though. I went into lunch yesterday, struck up a conversation with a gentleman and asked, how are you feeling? And he said confused. And so I'm like, is that, K-shape economy hangover or what? Because, you would go into some of our luxury panels and, you had to crowd surf if you wanted to get on stage because it was just so packed to the gills. So, why would people be confused?
Well, I think one is the uncertainty is still in the market. There's still a ton of volatility. We've got a war in Ukraine. We've got a war in Iran. We have a policy which is all over the map. You have increasing inflation, and I mean increasing, not maintaining, but we now have increasing inflation. So the market's doing very well despite all that volatility. At the same time, consumer confidence is at an all-time low that it's been, and the conference board just came out last week with CEO confidence, and that was at an all-time low of the top Fortune 500 companies. And so it's confusing. And I think a lot of people are explaining it that travel and the experience economy as a whole is no longer a discretionary. And we kind of heard that over and over and over again. On both the brand side, the OTAs said it because they're not seeing, a decline in searches and so forth. And then the owners are saying that as well. So, that does breed confidence. But then you kind of look around or you open up the newspaper and it feels very volatile and uncertain. So I think that confusion is related to that.
But then you have Hilton Chris Nassetta saying that 70% of their business now is drive to, when pre-pandemic it was 30%. So
it's that tank of gas away vacation that people are taking versus flying across the country. So the demand's still there, and people are still going to travel. It's just going to look a little different until the gas prices start to come down and inflation starts to come down.
So clearly there is an interest and a belief that this market will continue to grow despite all the volatility.
As you said, you're a lot of bullishness, and there's a lot of ingredients for deal making to come forward. Do you think that's the kind of the just the beginning of the tidal wave of future deal making?
It's market by market. It's asset by asset. Yeah, but what we are seeing is very sector-specific capital that is being allocated to this sector, and you're seeing it come through long-term institutional capital, which again, as I said, it sees it as a long-term securitized investment. That's a good thing. Long-term capital, whether it be family office or sovereign wealth, they like that. Pension funds and so forth. But then at the same time, there's value add, right? And this is one of those unique asset classes, to Stacy's point, where it's not just heads and beds, but there's the F&B, there's the spa, there is the revenue by square foot opportunity, right? So there's a lot of creativity in this space, and all of that can be done in this sector at scale. Now, yes, on the flip side, it's complicated, but I think that breeds a lot of excitement for the space in the long term. And what it does for us as a platform for the industry is it leaves us with a lot of things to talk about, a lot of education required, a lot of connectivity between, the experts and the operators and the advisors and the investors.
There is still a big middle class. That seemed like there was the message of the CEO panel and, the C-shaped economy versus the K, kind of reminding people of where interest rates have been historically. So in the grand scheme of things, it's not that high.
Income disparity was a big topic. We heard it from Anthony Scaramucci, who told me I could call him the Mooch, and so I will. And you heard it in every other session or most other sessions. It was framed in some senses as the K-shaped economy. But the reality of that, which I think you're getting at, Cameron, is that it is an income disparity issue. And the reality is that 70% of GDP is dependent on consumer spending. So, we talk about the market, stock market, and the public companies. Most of those companies their earnings are built off of the middle class. So if that middle class goes away, declines, has issues, it's not a high tide lifts all boats. It's actually that tide goes out and a lot of people are left exposed. So I think that there's two narratives that are emerging. And on one hand, taxes, insurance, and labor, particularly as it pertains to unions, are really becoming complicated for hoteliers. And those are in many ways forces that are outside of our control. And I know AHLA is doing an incredible job on behalf of the industry trying to protect hotel owners and operators. At the same time, I think we heard a parallel narrative that, they also recognize that people need to earn a livable wage. And I think we're going to have to balance that because on one hand, as an industry, we do an incredible job against, human trafficking. We are a people-to-people industry, and people earning a livable wage is part of hospitality. So I don't think anyone's pushing against that. But I think the challenge we have as an industry is that we are seen as an export by politicians. And I see this as a real issue that's not going away.
Absolutely. I am curious too, though. I mean, like in sort of fueling this growth in mid-scale hotels, I heard a lot about infrastructure spending that's finally like trickling into the market, but also AI data center construction also being a fuel. I mean, have you heard any other opportunity areas that people are really kind of bullish about heading into the next year and beyond that are really going to lift this industry up?
Biden's bill was the Green Act was meant to stimulate a lot of that infrastructure. And, people that are building roads and so forth will obviously fuel a lot of the mid-scale.
We saw in the program and we saw today a lot of people are still luxury seems to really be on the top of people's minds. Investors are interested in how can they be involved. We have operators and developers figuring whether it's a new project or a conversion. There was a lot of conversation and a lot of engagement around leisure, around branded luxury, around conversions. And there seems so you've got the mid-scale, you've got income disparity, but then on the flip side, you do have this other pillar that if you can get in it, you can be successful. And so it's an interesting take, because we've got kind of two sides.
Yeah. I was shocked. I mean, I asked a couple of panelists, the era of the $1,000 a night hotel room being kind of the new norm, especially here in New York.
Yeah.
Is a bubble going to burst? And they're like, no, just kind of,
Yeah.
They were all very bullish that there's still runway there. So
But New York is very unique in that sense. Miami is unique in that sense. What I think is interesting is you're starting to see San Francisco come back finally. So there's a little bit more demand, both on the consumer side and the operating performance, but also in acquisitions in San Francisco. Again, to your point, tapping into that AI surge.
Now, before I let you both go, anything that either of you are going to be looking for, as we plan for the next NYU? Stacey?
Oh gosh. I think really what I'm looking forward to seeing and learning over the next year as we build out the program for 2027 is not only where the market is going, how capital is going to be deployed over the next 12 months, and to really see how AI and technology continue to have a presence in all of the different areas of hospitality and hospitality investment to drive value, drive bottom lines, drive revenue. We had a lot of conversations this week with people who are launching different technology AI initiatives, who are, dipping their toe in the luxury market. So it's going to be exciting to see a year from now where they are, where they stand, and what their results have been, and if they have been able to move their developments forward.
Yeah, I hate to sound cliche, but AI is emerging in real time. And it's moving so fast. I think the real question is going to be, are we seeing it on the P&L? Because nobody can point to any material impact that AI has had on the P&L.
Yeah.
And then second, there's sort of these two different themes around AI. That is, one is the liberalization that AI provides, that everybody has now AI in their pocket, and it makes all of us, super workers or super this or super that. And, I'm a huge AI user. I find it fascinating. But again, at the same time, giving everybody a super agentic AI in their pocket has a lot of ramifications, not all of them positive. And it could be cybersecurity. It could be things that we're just not even thinking about. And so I'm really curious to see how that evolves into really being a tangible, material improvement on the P&L, on the guest experience, on efficiency and optimization. We've got to start to see real things in the business side of it, rather than just, wow, these are all the potential things it could do. And I think we'll start to see them next year, both good and potentially bad, over the next 12 months, just given how fast it's moving.
And it will be interesting to see how potentially, the government steps in, and if there's new guardrails put in place with how you're using AI and how you're using that data that you receive. That's something that we didn't touch on this year, but I think definitely in 2027, we'll see more of those conversations come about as well.
Same time, same place next year. Let's meet up and see how things fare.
Greatest city on earth.
Definitely.
Go Knicks.
Thanks, you all.
Thanks.